Hey YouTube, this is Zach with Achilles Financial, and today I am on the STEM website, and that is because STEM and ChargePoint announced a joint eMobility offering. What this is going to do is it's going to leverage ChargePoint's hardware and infrastructure, as well as STEM's Athena software. So ChargePoint, which trades on the stock exchange under the ticker symbol CHPT, is a stock that blew up over the 2021 time period when we saw a lot of green energy stocks really explode, and they are a EV charging network. And one of the things that they are going to be looking to do is leverage that STEM Athena platform to help as a behind the meter solution for their charging network, hopefully enabling them as well as the end user save some money. So what we'll be looking for is how they are supported by things such as the $5 billion NEVI program, that is the National Electric Vehicle Infrastructure Program, which is coming on the back of the Inflation Reduction Act, which allocated a significant portion of funds to green infrastructure, primarily charging infrastructure. Two of the larger states where that is happening, where we are seeing some of that impact, is going to be in Texas as well as California, where STEM is already making big pushes. That's largely to enable or expand their current infrastructure, as well as continue to work with partners in those areas. The reason that this is important is because ChargePoint's Express Plus, which is their primary offering, what they're looking to leverage, is going to be their big charging station or item that they are pushing, and it's what Athena platform is going to leverage. Something that I thought was interesting in here is that John Carrington, the CEO, did come out and said that they expect 50% of their behind the meter activity over the next 3 years is going to be eMobility. And I think creating these partnerships is going to be a great way to grow that relationship. So it will be interesting to watch how that develops going forward. With the earnings call now about 2 weeks out, one of the things that I would expect is for one of the analysts to ask why or what they plan on monetizing from this relationship and what that could look like, because 50% of the behind the meter sounds like a large number, but if it's a relatively small revenue provider, I think that that could cause some problems for the company in terms of what this could reliably be. The nice thing is because this is software based, it is going to be very high margin, which is something that the company is looking to actively expand upon. And the other question is, I want to know, is this a 2023 item? We are in January when this is being announced. Are they going to monetize in this calendar year? Or is this something that they expect to see over the next 3 years and hopefully ongoing? So that's what I'm going to be watching. Now let's look at the stocks themselves. So I have STEM up here on TD Ameritrade's website. We're going to be watching them because they had a strong day. The market itself had a strong day, especially after a lackluster yesterday. And we did see that if we look at the year to date, you can see that the stock was lower at some point in time than $8. But overall, the stock basically stayed flat on the news. Again, we're up around $10 a share, around $9.90 at the last trade. Again, that was post-market. So it'll be interesting to watch. However, when we're talking about making big moves on STEM, I do want us to be watching the upcoming earnings that are going to be on February 16th. If you want to watch that, I am going to once again stream that live on the channel. They are expecting, once again, negative earnings per share, but we're going to be watching that. Keep in mind that this is supposed to be, or this upcoming Q4 that they're announcing is going to be the best quarter on record from a revenue perspective. But I'm primarily going to be looking at the guidance that they are going to issue for 2023, because they already warned on top line guidance, their revenue number for Q4. And that's something that they did last year and it negatively impacted the stock that day. So we've got to see that top line guidance, as well as the potential to be profitable in the second half of 2023, at least on an EBITDA level, which means that probably stock-based compensation is going to push them into negative net income, but they have to be profitable the second half of 2023, or I think that the stock could be punished. The other thing that I want to see STEM announcing on this earnings call is going to be any responses to the short report that was issued. I did make a video on that. That is something that I think did not get enough coverage or maybe warrant associated with it, and that may be because STEM is a relatively small company in the grand scheme of things. But I thought that their response, while beneficial in calling out 2 specific points, I think that they left a lot left to be said, and I would like to see some answers there, whether they are volunteered from management or whether the analysts hit them hard on that. At this point in time, the analyst reports do continue to maintain a very strong buy rating, with quite a number of analysts having very favorable outlooks on the stock. So I do still think that it is one to watch. The other one that I want to be looking at is ChargePoint Holdings. Something that I would highlight here is, once again, strong analyst ratings. But when we talk about the fundamentals for this company, this is a company that continues to hemorrhage cash. And this is something that I want to watch going forward because you can see explosive revenue growth. Love to see that, but we're also seeing the cost go up as well. And that's leaving the company with negative net income. So they continue to blow through that cash, and I think that that could lead to another cash raise in the future. You can see some of those items here. Or what I'm going to be interested in watching going forward is how they're able to benefit from some of the government programs. So both ChargePoint and STEM are at a similar place. They're growing revenue very rapidly. They have clear lines of sight, ideally, to being profitable. However, there's still going to be some time before they're able to get there. Will this relationship help, and will that have a positive impact on the stock? We will see. In the meantime, if you find content like this helpful, please leave a like and subscribe. And if you want to keep watching or chat about some of these companies, feel free to join the free to join Discord in the description down below. Thanks for watching if you made it this far, and we'll talk to you later.